Good evening, Mpo, and thank you very, very much. We start here tonight. South Africa's major banks have delivered some strong financial performance against complex conditions undertaking the world this particular year. But this has been underpinned by a disciplined focus on strategy execution. This is the analysis by PwC on South Africa's banking sector following a tumultuous 2 years of COVID-19 related trading disruptions. To talk more about the report, we are joined by Costa Natsas, the financial services industry leader at PwC. Thank you very much for joining us. This is quite an encouraging report because for the previous report that PwC released showed that in the previous year, the South African banks lost a combined 50 billion rands due to the disruptions that were brought on by the COVID-19 related lockdown. This is quite a change, Mr. Natsas.
Kalani, thank you very much, firstly, for having me. And yes, indeed, isn't it great that we don't need to talk about COVID every year? So, as you mentioned, after 2 very challenging reporting periods, I'm pleased to tell you that headline earnings of the 4 banks we analyzed grew 19% from 40 billion to 48.3 billion. And it's great to see that, our banking sector remains strong, it's stable, they have robust levels of capital and liquidity, and our regulators have done a fantastic job, and Europeans and other global regulators and investors look up to us.
That's what I was about to ask you, how South Africa's banking sector actually compares to their peers in emerging markets and the rest of the world, looking at how they actually responded in the past 2 years when it comes to those disruptions.
Yeah, so firstly I would say, if you just look at returns on equity, returns on assets, even at our lowest, where we sat in the low teens earlier in COVID, and now we're sitting at 18% to 22% ranges, the global peers are still at a range between 4 to 6%. So from a return perspective, they fared very well. If you look at the COVID impact, it's probably fair to say that the South Africans and the rest of African banks actually provided for provisions fairly quickly. The regulators stepped in to offer support when it came to consumer protection, as well as protection from the banks in the form of liquidity and capital. And that's stood us very well.
This recovery in the banking sector is notable, particularly because of the role that the financial services sector plays in the country's economy. Is that why it was so important to undertake this particular analysis, and you do so every year?
Yeah, that's entirely correct. We find there's huge correlation between GDP levels and banking results. And therefore, when the economy is going well, the banking results are good. But also what I found quite comforting here is if you look at the outlook of the sector, we've heard CEOs comment that energy deals are coming up, renewable energy deals. Now that spectrum's been sorted out, they have the capital, they have the cash available to invest. And we all know we need that quite urgently, Kalani.
Let's talk about the risk outlook. In the report, you said the risk outlook remains complex and ever evolving. There are also clear signs that the worst effects of the pandemic are now behind us. But let's talk about the outlook. You actually mentioned something that is quite topical these days, and that's the Financial Action Task Force. And we've spoken to at least 3 of the big bank CEOs about what a grey listing would mean. When it comes to the outlook, Costa, is this top of mind when you look at the risks to our banking sector looking ahead?
Yeah, so let me mention a few uncertainties or risks, as you say. I think the first one is the macroeconomic situation. Interest rates are starting to rise, and many expect them to keep rising in the coming year. I mean, it's good for banks, but if you look at consumers, unfortunately, higher interest rates starts to hurt. At the same time, we're seeing inflation levels start to increase, which again leaves less money for us to spend and less money on the table. Energy prices are going up. I've heard the previous speakers speak about load shedding over the weekend. All of those are not positive. When you look at grey listing and the Financial Action Task Force, is that a risk? Yes, it is. Is it certain that we will that there will be repercussions? No. I've heard various schools of thoughts around that. One is that we'll be given a grace period. We have in the last few months put measures in place to respond to what the task force wants, in the form of making sure we understand where we lend money, we understand the ultimate beneficial ownership, and that's good news. But at the same time, what I'm seeing is banks are planning for any outcome, as you'd expect them to do. So they've already started talking to correspondent banks to say, if we had to be grey listed, what additional regulatory requirements, what additional documentation would you need for us? And unfortunately, there could be a cost related to meeting some of those requirements. But there's also many positives, and I can talk about them if you want. I'd rather focus also on the positives.
Let's talk about those positives, because one of the positives that are clear about how the banks actually performed in the past 2 years is them being able risk managers. And when you look ahead, our banking system has proven that whatever may come, they are actually able to withstand the shocks when you look at how they actually performed in the past 2 years.
Yeah, that's entirely right, and that's a very good example. So banks have lent, but you could see based on the lending they've done has been quality lending. They do hold high levels of provisions, and therefore that means their balance sheets are healthy. The regulators, as I mentioned earlier, played a critical part in assisting the banks during these difficult times, and obviously their scrutiny around the system is extremely important. If you look at the other positives, we're hoping that the inflation story and the high energy prices and high interest rates fall, let's say within 12 to 18 months' time, and then that will create some stimulus in the economy and hopefully be healthy for the consumer as well. And as I mentioned up in the start, I'm really excited about the structural reform messages that we're hearing around infrastructure projects, renewable energy, construction deals, and many, many others. So let's hope we action that very quickly.
Before I let you go, I wanted to highlight something that is quite important, the recovery in the bank's return on equity and the capital. Talk more about that and what this actually means when it comes to the health of these particular banks in South Africa.
Yeah, so you can look at it from two perspectives. The return on equity, if you're an investor, a shareholder, those high returns, as I mentioned, in the high teens are very favorable. You've seen that the banks have paid dividends again, which is great. I remind you, during COVID, they stopped paying dividends. So that's a welcome return. For people that work for banks, you've also seen that the staff costs of the banks have gone up because they've also shared in some of those incentives as well. So returns is a healthy measure, and as I mentioned, it's a healthy measure correlated to the economy, so that's good news for the economy. From a capital perspective, regulators across the world require banks to keep a certain amount of capital to cater for the unforeseen events, be that impairment, operational risk, things that are out of control. And we like those, and boards and supervisors like those capital levels to be as high as possible. You'll see that the South African banks are very well capitalized, as I mentioned early on. In fact, the capital positions we expect will continue to improve in the next year as interest rates go up and banks earn a lot more revenue. So Kalani, healthy capital, in summary, and a healthy balance sheet leading to healthy returns for shareholders.
I know I said I would let you go soon, but you mentioned something on the outlook when it comes to the uncertainty surrounding the persistent high unemployment levels in the country. And you mentioned also the backdrop being the political ANC elective conference in December as adding some uncertainty. What do you mean by that? What sort of uncertainty could be there for the sector, if I may ask?
Yes, so Philani, I wasn't making reference to the election, so apologies if you heard that. But in terms of unemployment in the sector, to me, I see that as an opportunity. We have many unbanked consumers in the country. I'm excited by some of the efforts that we're seeing in the South African economy around implementing what we call the rapid payment system. The central bank's looking at issuing a central digital currency and looking at various feasibility studies. That means people who don't have access to cash or some digital money could have access. Our technology is getting better. That allows them to transact. Hopefully that grows the economy, and that means we can give more people more jobs on a regular basis.
Costa Natsas is the PwC Financial Services Industry Leader. Thank you very much for your time this evening. Well, it's that the banks in this year at least have done very well to actually recover from the shocks, the geopolitical shocks, including COVID-19.